Imagine locking in a mortgage rate at 2.8% in 2025. Sounds impossible, right? Well, there's a little known strategy that can make that dream into a reality, and it is called an assumable mortgage. In today's video, I'm breaking down how it works, a step-by-step process to secure one, and how it can save you hundreds, if not thousands of dollars on your monthly mortgage payment. If you're buying or selling real estate in Miami today, then this is definitely something that you need to know. So stick around until the end, because I'm going to show you how you can spot these deals and how to avoid common mistakes. But first, if you're new here, I'm Steven Vargas, your Miami real estate advisor with Cervera Real Estate. And before we get started, and make sure to tap that like button, subscribe, and hit that bell so you never miss out on ways to build wealth in today's market. So first, let's talk about what is an assumable mortgage. Well, an assumable mortgage lets the buyer take over the seller's loan, including the interest rate, the balance, and its terms. So if a seller locked in a 2.8% mortgage back in 2021, and yes, they actually had those back then, you could potentially inherit that rate today, even if the current rate sits around 6.5%, which is what it is today as of the making of this video. So let's compare. Let me just give you a hypothetical example. So let's assume that a seller has a loan currently right now of $400,000 paying 2.8%, and you're getting a loan for those same $400,000 but at 6.5%. The monthly savings between the two with just changing the interest rate is over $850 a month. So this isn't just clever, but it's the strategy to use, and one that can be a game changer in high cost markets like Miami. So here's how you can take advantage of an assumable mortgage the right way. Step one, identify properties with assumable loans. The first thing to know is that most FHA, VAs, and USDA loans are assumable. Unfortunately, conventional loans usually are not. The quickest way to find out which loans are which is to use an agent who already knows how to identify these, because if not, you're going to spend a lot of time trying to find something that an agent could quickly help you with. This is something that I help my clients do every single day, so it's not that complicated. Step two is to get the seller on board. The seller must agree to the assumption, because they're going to be the ones to help initiate the process with their lender and share those details to get started. Then you go to step three, which is apply with said lender. You still have to qualify, so you're not going to bypass that. The lender will review your credit, your income, and your debt to income ratios. Quick disclaimer before I go any further. Of course, I think it goes without saying, your approval is going to depend on your financial qualifications and the loan and the property itself. So like I mentioned, goes without saying, but speak with a licensed mortgage professional before assuming any loan. So let's continue. Step four, you got to cover the equity gap. More than likely, the home is going to be worth more than what is currently owed on the loan. So you'll need to pay the difference either via cash or with a second mortgage. Let me give you an example. Let's assume the home value of a property you're looking to buy is $500,000 and the seller's mortgage balance is $400,000, the payoff in other terms. So you'll need to cover that $100,000 difference between the $400,000 that's owed and the $500,000 that you're paying for. And usually you're going to do that with paying cash, or you get a second loan. Then once you do that, then you go to step five, which is close the deal. The great thing about this is that you close this deal like pretty much any other deal that you close, but instead of getting a brand new loan, you're stepping into an existing one. So you're probably asking right now, Steven, if this is such a great deal, why isn't everybody doing this? Well, here's the reality. The benefits of using an assumable mortgage is huge. You could definitely secure a lower interest rate, and by proxy, lower monthly payments in many cases, and potentially simpler loan terms. But there are challenges too. Not every loan, for example, is assumable. You also need to qualify financially, but that kind of goes without saying. And more than likely, you're going to cover the equity gap that most loans today are going to require, which also is going to mean that you have a bigger cash outlay to get this process started. Speaking about the process, it can actually take a little bit longer, usually around 45 to 90 days, as opposed to the traditional 30 days that most loans today take. But mainly, besides all those points, is that most people, most buyers and agents don't even know that this is an option. This isn't taking place because a lot of people aren't offering it or don't even know that it's an option that can be taken. So it's not for everybody, but if you're the right buyer or the right seller, this can be a total win for you. And most agents, like I mentioned, aren't even talking about this. In a competitive market like Miami, assumable mortgages can give buyers a real edge and give sellers a unique marketing tool. What do I mean by that? If you're selling a home with a low rate mortgage, promoting the assumability, if you will, you can make your property stand out, because that property can actually fetch a higher price, given the fact that you can actually get a buyer that inherits a lower mortgage rate, and by proxy, they're able to pay more. Remember that the interest rate is the buyer's buying power per se. So it is a great marketing tool to be used. And if you're a buyer, it could mean getting the home you want with a payment that you can actually afford. If you want to explore assumable mortgages in Miami or want help buying or selling a home the smart way, then let's talk. Use the link in the description box below to schedule a call with me. Like this video if you learned something new, drop a comment if you have questions, and subscribe to the channel so you never miss out on another real estate strategy that puts you ahead in today's market. Till then, I'll see you on the next one. Take care and God bless.